There are a variety of reasons why your gross profit is lower than you expected. Watch this video to learn a quick way to narrow down the problem. Regardless of how you calculated the price for your service, the prices cover three major categories. First, we've got estimated cost of labor, our materials, and then the gross profit that we want to generate. And so you may have used a pricing formula that charges 5 times the employee's hourly rate, or you take your parts plus 50% markup. You may add a trip charge or a day rate for the crew. You may even have flat rate pricing. It doesn't matter how fancy your calculation is. In service companies, you want to be reimbursed for the labor you pay to your employees and the materials you pay to the supply house plus profit. And more specifically, we're looking at gross profit. All the price calculations can be converted to show these three main categories. Regardless of how you actually calculated the price, the information boils down to these three items. So let's pretend your sales team quoted a $10,000 job for one of your most recent projects, and your team is going to replace an air conditioning system. Think of the price tag as the plan or the budget for the project. You plan to spend $2,000 in labor, $3,000 in material, leaving $5,000 of gross profit. So the first question we need to answer is, did the $10,000 price generate the gross profit that we planned? It's important for us to check the systems to confirm that the plan actually turned into reality. To confirm that the project generated gross profit of $5,000, ask your bookkeeper to pull the details of the project and summarize the numbers in this simple format. On the left side is our plan, and then the bookkeeper can provide the actual numbers on the right side, where you can see how much labor was actually spent on the project, how much materials, and then the gross profit. And you may be surprised to see the actual numbers when you compare the price, the plan, versus what actually happened with the gross profit, because it can feel a little bit painful when you see that the labor is double the amount that we planned. It can get painful when we see this, because it makes our gross profit $2,000 less than what we planned. And unfortunately, this happens more than you think. The price looks right, but something went wrong when delivering the service. There's a disconnect between the price and the profit. When companies do not generate the profit that they expect, they have less money in the bank, and so they assume they need to sell more. But what if you do sell more? What if you have 10 more projects just like the one that we went through in our example? That means the company would have $20,000 less gross profit than you planned. It's possible that selling more will only generate more problems, not more profit. The good news is this is totally fixable. I'd love for you to think of yourself as a money detective, and you are searching for the profit leak in your business. So far, we have 3 clues on our missing money case. The first one is we've narrowed down the problem to one specific revenue stream. It's in our install department. We've also identified how much the problem is. We've also narrowed down the problem to direct labor costs. Next, we need to dig deeper to pinpoint the problem. One of my tricks of the trade is to think about all of the people that are involved in the process. For this particular service, who is involved? We need to start with the end in mind and work our way upstream. We know that the bookkeeper is involved, the install crew, and the sales team. So if we start with the bookkeeper, we want to make sure that there's no coding error or miscommunication between the field and the office. It is possible that the bookkeeper just didn't know that there were 2 projects at the same job location. What if there was just a failure in communication where that extra time needs to be coded to the second project? If we do not identify the problem with the bookkeeper, then we go upstream to the install crew. Was there a change in scope of the work? Were there too many mistakes and corrections made that ran up the labor costs? If it's still not clear, we've got to go upstream to the salesperson. Did the salesperson gather the right information so they could estimate the right number of hours? Or did they give a really big discount or free services to sweeten the deal? So when you identify where the profit leak is hiding, you can determine why it is happening, so that way you can prevent it from happening again in the future. In our example, let's pretend like we identify there was just a lot of mistakes. If we keep going, we may find out that the mistakes were made because the installers really felt rushed to finish the job on time. So why did they feel rushed? It was because the sales team promised same-day service on a Friday after a long, busy week. Between the cost of the mistakes and the overtime costs, the labor was double what was projected. Now it's time to prevent the problem from happening again in the future. So we'll need to consider how overtime will be calculated in the prices, when the sales team is allowed to promise same-day service, and how to coordinate schedules. And then also, how does our team maintain our high-quality control standards even when the team is working overtime? This may seem like a daunting task, but please stick with it. The process is well worth the effort. Plus, it gets faster over time, and as you strengthen your systems, you'll find that the business will start to work on its own, which means you'll have less detective work. To recap, these are the 4 steps that we need to complete so that way we can reconnect our prices to the profit. So the step 1 is compare the price you charge to the actual profit generated. Step 2, identify where the problem is hiding. Step 3, dig deeper to identify why there's a problem and then fix it. And then step 4, implement changes to prevent the problem in the future. Now, step 4, don't overlook this one. You don't want to spend all this time and money and energy fixing this problem over and over and over again. Take the time to fix the problem forever. The bottom line is, regardless of how you calculate your price, you must confirm the price is working. The price is the input, the estimate, the plan for generating cash flow. And you got to make sure that it connects to the profit, the output, the actual real life number that confirms the prices work the way that you planned. So when was the last time you confirmed your prices generate the profit that you planned? Before you chase more sales, confirm the prices are right and that they are actually working. Thank you so much for watching. As always, if you have a business question, please reach out. I am happy to point you in the right direction.